So I will start by saying this is not the first panel I've done that has preceded the end of the day or a happy hour. So we will try and keep it punchy and make sure that folks get out on time for evening activities. But thank you for joining us. We wanted to talk, the last panel focused a lot on what is happening in the US space, and we will talk about that, I think, as well. But our discussion today is focused, I think, because lots is happening, lots is occurring in the EU and the UK, respectively, with respect to regulation. And we wanted to get into it, talk about what those developments look like, what it could mean for the rest of the world in terms of crypto regs. And with me are two panelists. We have Mai Santamaria from the Central Bank of Ireland joining us virtually, and Nina Moffatt from Paul Hastings. And I'd like to give them both a chance to introduce themselves, starting with Mai.
Hi, good afternoon. Can you hear me okay? See me okay?
Yes.
Excellent. So listen, there's a bit of an echo because I can hear myself there. As you said, it's a very short time for, I suppose, for drinks. I apologize. I think one of the previous panelists said that the lawyers usually suck the air out of a room. I would say the same about regulators. That's why I'm not even allowed to be there. The jokes aside, unfortunately, I couldn't be there in person, but I'm delighted to be able to at least speak to all of you today. I've been looking at cryptocurrency and blockchains for the Department of Finance for the last 5 years, and I've been leading with the negotiations on the market in crypto assets, the famous MiCA with the European Union. And hopefully be able to provide some insights on that piece if you have any questions for me over the next 20, 30 minutes. Thank you, and it's a pleasure to meet you all.
So I am a lawyer in the room, so yeah, definitely sucking the air. I'm a financial services lawyer that started her career sort of 12 years ago doing, what was regulated then, so securities. And then somewhere along the line, I found payments that became fintech, and we can have a whole new debate over whether that's what that is. And then in the last since 2018, I found myself doing more and more crypto work. The first piece of work I ever did was for an exchange at Mt. Gox, which people might remember, that went down, and I had to deal with some banking relationships here, and I was like, what is this? And we started talking to the regulator. And I feel that was a long time ago, and now I find that sometimes 80% of my week is crypto asset advice, covering all the things we're going to talk about here. Like new legislation, AML, CTF issues, cross-border complexity. So that's kind of what I do on a day-to-day basis now, and also come from the background of a sort of securities world. So it resonated what the previous panelists were saying about where regulation is going, and I think that's probably a theme that we'll probably pick up here. That it's come from nothing to possibly being most closely affiliated to sort of how securities law, even in the UK and EU, looks at it. But I'll hand over back to Susan to kick us off.
Yes, and we'll get right into it. I think so today, news broke that the technical discussions with respect to the markets and crypto assets regulation, which we'll call MiCA. There is also a big debate, MiCA, same thing. Which is the EU-wide crypto asset regulation. And Mai, if you could just explain, what is it? What does it do? And why did it, what was the impetus for the negotiations, and what do you see as the path forward from here for that regulation?
Big question, Susan, but I'll try to at least answer some or provide some clarity to those attending there. So the market in crypto assets was announced in September 2020. Those close to it at the time probably would have thought or seen this as a reaction by the EU authorities. As a defensive play, I would say. Remember the days of Libra? That was June 2019. It wasn't so far ago. We've moved on from Libra to Diem. But this literally came in hot of the heels of the potential threat to the monetary sovereignty of a privately issued stablecoin. And I think this is obvious from the original draft of the regulation that came out in September 2020. It was actually drafted by 3 regulators, the ESMA, the Security Markets Regulator, the EBA, which is the Banking Authority, IOSCO, and it really feels financial servicey. So doesn't it? You can really tell, some cases you can pretty much can see literally the pen of ESMA, and that's okay, because effectively those regulators were effectively putting down what they knew. Okay, so we've discussed this file. We've obviously agreed. Was actually a political agreement was reached in June 30th of the summer. At the time, there was also a change of presidency. For those in the UK, you don't have to deal with this anymore post-Brexit. So things are easier for you. But yeah, after 6 months, we have a change of presidency. The Czech presidency took over the file, and during the summer, they took on board what effectively was called the technical review. So this is ensuring that the file that was agreed at political level on June 30th actually stood from a technical perspective to that agreement. So the technical teams met throughout the summer. We provided feedback. So just an hour and a half ago, 2 hours ago, we received the final file for pretty much final approval for then going ahead to the internal corporate meeting, hopefully for legal linguists to review during the months of October and November, and for a plenary approval by European Parliament in December. If all of those obstacles happen between now and December, we would find ourselves with a market and crypto asset regulation with a official date of 1st of January 2023. What this means, this would mean that in Europe, if you are a crypto asset sales provider, and the list of services is there, it's long, go into detail at it, you need to be regulated in a European country. And from once you get the license and you're registered, you obviously are able to provide those services to the wider EU. So passporting will definitely apply. If you are an issuer of a crypto asset, and in this case, the market and crypto assets separated and created, I would call it 2 types of stable coins. The fiat-backed stablecoin, this is probably the most common to all of us, the USDC type backed literally by one fiat or a type of fiat, versus the what's now called ARTs, asset reference tokens. So these are effectively stablecoins that derive their value from more than one fiat or a basket of fiats or a basket of different assets. Now, they feel a little bit like ETFs, they feel a little bit like money market funds, but it's all down to where the liability for the value that reserve actually resides. That's actually driven the ARTs piece. So if you're an issuer of another e-money token or a stable coin pegged to a fiat, or you're an issuer of an ARTS, you'll have to, a new one, obviously, anything that's already in existence, obviously, is pre-MiCA, so will not be under bigger regulations, will require a white paper from regulator and effectively all the different regulations, and bring them forward to a similar regime to what we understand financial instrument regulatory environment is to be. Whether it's a good thing or a bad thing, I think it depends on who's looking at it and to what purpose, but clearly intends to bring clarity from a regulatory perspective. It's a regulation, it's not a directive. So this is very different from the MiFID. There's no scope for for each national competent authority, for each country to then take the directive and interpret that directive and make transitions that might be slightly different for each specific country. So I think that's a very important point as well. It's a regulation from the day go.
I think that's such an important point, because in the US, as we heard from the last panel, there is no universal standard for how you regulate either the players or the assets. And the results of that, there was a Department of Justice report that had at least 8 different regulators named as having overlapping jurisdiction over tokens. That's in addition to the money service transmitter authorities in each state that regulate. And the result is a fractured market, which has caused a lot of havoc and confusion from industry there. So,
Yeah, I'd just add that I think that's the position now, right? In the I'll put UK and EU in this bucket just for now. But I, as a practitioner, I spend a lot of time advising, businesses operating in the crypto asset space of how do I access the European market. And often what we've got is a very fragmented approach, because at least we have harmonization on the fiat side, probably more so than the US, because we have an e-money and a payment services regime. But imagine you have a product and you've got a fiat off-ramp. Okay, fine, set up in France and passport. That's nice and simple. It's been established for a long time. But actually, hang on a minute, you've also got a crypto wallet. Well, actually, the answer here is if you want to freely market in Europe, you've got to go and get a registration in every single member state or risk accept. And so the market at the moment is a mess in Europe. And I think, to the point about bringing in consistency, there's a cost element to living in the shades of grey at the moment. So, bringing up what the previous panelists were talking about, sometimes, that ambiguity can lead to innovation. But I think from my experience counselling clients, the last 18 months has been a very difficult time. It's been very costly also since Brexit as well. Because we now have a UK regime you have to follow and a European regime, and that is probably going to become more stark.
Well, it's a good segue. You have this careful, thoughtful process that has been conducted by the EU over months and months.
Sure.
Tell us what they got wrong and how Britain's going to improve everything in MiCA for their regulatory regime. And I say this a little tongue-in-cheek.
Yeah.
But what do you think is the benefit that, or what you're thinking about, or what the UK should be thinking about as you move forward with its own regulation?
I think MiCA was very, very sort of, it tries to cover everything, right? It's, as you talk about, it's a bit of a kind of, we have securities practitioners looking at, and, banking, and it tries to solve, I think, all of the problems in one go. Now, it will remain to be seen whether that is successful or whether we get a MiCA 2 in about a week's time. But I think the UK, always. This is the way the financial services work. But I think with the UK, I mean, it is more patchwork, right? Because we don't have this unifying law that's on the cards. But what we've got is we've got UK implementation of the 5th Money Laundering Directive. That's bedded in. So for those, you need an anti-money laundering registration in the UK to do crypto asset custody and exchange services. The FCA spent a lot of time considering applications. We can probably do a whole new talk over whether that was a good or a bad thing. But that's here. We've got AML regulation. And then obviously what the UK's done is probably gone, I'm going to take a little piece of the pie, and with the financial services bill, I'm going to regulate stable coins, or effectively stable coins. They're actually defined as, I had to write this down, digital settlement assets under the bill. So we're going to see similar regulation coming in the UK to cover the sort of stablecoin world in a not dissimilar way, issuers, service providers to that market. But we're not yet seeing what MiCA's doing from a kind of market abuse, conflict of interest, I'd say sort of bedded in securities, laws yet. So I do think the UK will get there. I suppose the benefit of the UK is they're able to see how MiCA goes, and is able to focus on probably a smaller, the other thing that's going on in the UK is the financial promotion regime. So they're hitting marketing and consumer issues quite heavy.
Right.
So, but at the moment, it's sort of, if you're working in this space and you've got a business, I imagine you're a bit like, I can't keep track in the UK. I speak to many clients, they're like, what's the Bank of England saying about this? What's happening here? What's happening there? So it probably feels a bit schizophrenic. It feels disorganized. So on the one hand, that's a negative with the UK, but I do think we have the benefit of probably going piecemeal, probably implementing things in core areas, and then sort of seeing how that comes out in the wash, and having the benefit of seeing how it works in Europe. But which one will be the right approach, I think we can only tell in about 2 years' time.
Well, in an April 4th speech, the then Treasury Minister announced the government's intention for the UK to become a crypto hub.
Yeah.
Do you still see that as being an aspiration or to be determined? To be determined,
I would say. What has happened since then? We've got, politics in disarray, however you want to say it. We have new PM, we have inflation, we have an energy crisis, we have a cost of living crisis, and we have a war in Ukraine. So I think Liz Truss in 2018 talked about wanting to make the UK home of cryptocurrency, but said nothing really officially since. I think it will be a desire because it comes part of what is the UK post-Brexit in a post-Brexit world. But I think, unfortunately, other political, economic factors are putting probably a lot of proactive statements that Rishi Sunak made, for example, probably slightly on the back burner, I think is the reality.
I mean, it's going to be incredibly interesting, I think, on both fronts to see both how MiCA is implemented, what the UK does as it goes forward and the new government's established. But it's interesting, we, in the tail end of the political negotiations, and even during the technical dialogues, I understood that there was some discussion, does MiCA cover, how does sustainability fit into MiCA? Should NFTs and DeFi be covered by MiCA? How does that fit in? What are your thoughts, if you're able to share, on what the next iteration of this regulation, what is the next frontier to be tackled here?
Sorry. You're totally right. All these issues that you mentioned, I think it's probably maybe to understand at what point and how they happened. So the issue, for example, on sustainability. This is a very specific issue. It happened when the European Parliament had to vote because the way regulation happens in the EU. And I'll have to say, I put my hands up. I spent over 20 years in private sector. I worked over 7 years, not far, I suppose, where you are, when I was in Churchill Place in Barclays Bank. I was there when the Lehman Brothers colleagues walked out. So as I said, I do, all those years spent in those buildings, I didn't think twice about how regulation came about. So it's been a bit of a testifier for me to be this close to the process and realize what happens and how it happens and the people involved. So after the EU regulation is to be approved by Council, by Commission and by the European Parliament. The Commission put forward the regulation, the draft, the Council approved it in the end of November 2021, and it was December 21 when the file went into approval by the European Parliament. It was at this point the European Parliament said that they wanted to effectively ban proof of work. They felt that the usage, the energy usage was way too high to avoid or to ignore, and they were quite insistent on that would be the case. Now, this is December 2021. This happened like a week or two before Christmas. I think private sector and those involved didn't really know this was really happening. Things moved on. I think a lot of trying to explain what could and could not be and what would be. And effectively was part of the trialogues that happened between the three parties between that point and June. In the end, the MiCA regulation will actually reflect disclosure requirements, maybe white paper specific digital assets. Now, this is the same way some people are starting to put in carbon footprint of your your air ticket, your flight ticket, or your train ticket, or your soup. So that was definitely an issue at the time, but we think that obviously the common sense approach prevailed. The other issues were in NFT and DeFi, as you rightly pointed out. I'm comfortable now, personally, as our position was from our jurisdiction, from an Irish perspective, that it was a good point, a good step forward to not include DeFi. DeFi was kind of squished in as well at the very last minute with that expert and technical discussions. The previous file we've been looking at for over 16 to 18 months. It was certainly not the right place. When asked what risks are we trying to regulate for in the DeFi, I never got a clear answer. And personally, I think that not including and keeping that for a future discussion is the right thing to do. Also, because I do think that when it comes to digital assets, the discussion has to happen at global level. I'm also a member of the Committee for Financial Markets at the OECD, and I know that UK is very well represented in the Bureau. They're actually fellow Bureau members together with me, and we are having these discussions at a global level for DeFi. And I think it's important that it happens at that level, because what we're seeing with DeFi, personally, it's a move of what we're regulating and how we're regulating. We're just so used and hooked on regulating the entity. We've just forgotten I think we've lost the ability to look at what risk are we trying to regulate and how potentially we could do that. It's a lot of talks about decentralization. A pure decentralization might be able to self-regulate by default, actually by design. And that's why I think it was correct to not include DeFi in MiCA, because we're definitely not far off. There's not enough understanding, certainly not a policymaker or a regulatory level to be able to make those call at this time. And the last one is on NFTs. Again, it was pushed in a very late domain. There was no expert knowledge discussions. I understood that some countries effectively wanted to go down to the point of regulating OpenSea. If you start like those discussions, are you going to start regulating for financial services, eBay? I mean, we need to be very clear what is the risk that we're regulating for. My biggest concern, again, as part of the discussion, was that MiCA would end up a little bit like GDPR, a super cost to private sector, a cost to innovation, and a cost to companies. Yes, there's an element of maybe some benefit when it comes to your data rights, but at what cost has brought in. So I think that is point in time as well to defer NFTs. And again, what risk there might be from a financial service perspective to consider at a later date was potentially a much better approach than just shoo them in and then actually end up with an inaccurate, inappropriate, or over-bordering regulation.
No, I think
so. Yeah.
I'm sorry, I think it totally underscores your point about education is one that resonates certainly in the United States, and I think probably in the UK as well.
Yeah, I think the ESG disclosure point is just, for me, as a financial services lawyer for many years and practicing in other areas, it just shows that they still, if you're going to, where do they put crypto in their heads? And I'm not in the room, but as an observer, they still very much are putting it in the securities world. ESG is mandated for asset managers and for banks and for insurance companies under SFDR already. And what it does is it's going to give them a way to basically require crypto businesses to effectively up a lot of their internal controls to be quasi-investment firms and banks. And I think slight segue into something that I think sort of picks up on the enforcement talk, but also here, is that at the moment there are no prescriptive regulations on what governance around crypto asset firms looks like. But my experience of certainly the FCA and maybe of the Bank of Ireland too is, the importance of trusting companies to do these things and maybe not choose to regulate in certain areas and to talk about self-regulation. My experience of the FCA is they'll only get comfortable with that if they're comfortable with the governance and the structure. So while there's no specific governance, I think there's certain internal controls in MiCA and certainly nothing in the UK thus far written in stone. The UK regulator is ramming whatever they can into regulations they have. So I think that, for me, is definitely the next stage. The next stage is these regulations are coming. So in addition to the tick box, I need a license, I need a passport, I need to have a conflict of interest policy. None of these things are possible. And I think, in my view, none of these things can allow a business to grow if you don't equally invest in the governance around it and then allow the flexibility. I think in return, that's how international regulators will also get comfortable with trusting market participants to kind of go off and innovate. So, it's not there yet, but I think for me, that's something that we'll see come down the line. I don't know whether that's something that, the Bank of Ireland have also seen.
Do you think that, well, I do have a question on international standards, but we're running close to time. I want to give the audience a chance to ask one or two questions if you have them. Otherwise, happy to keep going. But does anyone have a question?
I got lots of questions.
Yeah. There is a gentleman in the back in a maroon shirt, and then we can switch over.
Just picking up on your last point, of where the regulators are going to get comfortable, because they love a throat to choke, and the problem in this space is creating that throat that they can choke. Are we going to get to the point of licensed chains? Because we're talking about regulating participants, we're talking about regulating everyone else except the validators and everyone else except the miners and everyone else except the chain itself. Particularly when you're talking about money services businesses and custodians of assets. Well, there's no greater custodian than the people who run the code that actually creates the asset in the first place. Is that where we're heading?
Outside of pure kind of crypto regulation, what I certainly see as a trend is this trend to want to regulate the gatekeepers, and more. Like you're seeing, regulation sort of in a way holds no bounds, but I think you're seeing thematically with things like DORA out of the European Union around regulating sort of that security aspect of things, and aspects of even PSD2 when they were regulating people who had control of data, that I think we're seeing a sort of, not a scope increase, I mean, they're doing it themselves, but I think not just European and UK regulators, but regulators probably wanting to regulate every part in the chain. Whether they'll ever successfully do that, or find that they need to do that, I think the way that they, I thought it was interesting, for example, anecdotally in DORA, they want to regulate systemic service providers because they see that they hold the key, because if they go down, then all the banks go down, because all the banks use X, Y, and Z service providers to do their IT. So I can see it thematically. I think we're a long way off, and it might be that they get to a point where they can regulate enough around the infrastructure, that they get comfortable that the risk is mitigated, to go to the point. But I can see it. I definitely can see it coming.
Thank you for all the information. I know, in the United States we have like the Howey test is one thing to kind of look at to think. Can you guys recommend for people who are looking to build in the space, is there some type of framework or regulatory paper that you think is a must read for us to consume?
Well, yeah, we don't have the Howey test in the UK or the EU, and for all the problems it can bring in the US, I think there's obviously been lots of papers written about how you interpret it from the SEC, and there's case law, and there's things, even though it still creates from an outward perspective a lot of ambiguity. We don't have that certainly in the UK, right? The way we don't interpret security as broadly. So what we have is we have different things. So we have a share, we have a bond, we have a collective investment scheme, which is probably not dissimilar in parts to the Howey test. The best thing I could read to just give you an overview is the FCA put out a policy statement on its approach to crypto assets, where it kind of buckets, not from a regulatory legal perspective, but from a kind of, different kind of security tokens, utility tokens, and which ones have the features of, what features trigger what kind of regulatory regime. Because the way it works in the UK, and it is still based on European Union legislation, is you need to decide if it's a security token, then it's like a security in the US, and you've got to think about prospectuses and public offer documents and licenses. If it's something else, it might be e-money. So unfortunately, we've still got sort of 3 or 4 legal regimes you need to consider, but the FCA paper, I think, is very helpful. It's not perfect to overlay onto European law because it's still UK focused, but I personally believe as a practitioner it's pretty good to get a handle on what the position would be in the EU as well. Although
what's interesting about that paper too is it recognizes that investors may speculate, but it doesn't change what they're looking at is what the token was designed to do in the first instance.
Yeah.
And that I think is the big difference between Europe, the UK, and the US. And I'd welcome any additional thoughts you might have on this.
Well, I think that's exactly a fantastic point. Is the design and the actual use is going to be a key differentiator. But the question, I think, is absolute fundamental when it comes to the EU. I mentioned the Moffatt, the directive, the fact that it's a transposition. So what does this mean for MiCA? MiCA applies when a digital asset does not qualify for any financial instrument under any current financial services regulation. And ESMA have been tasked to literally provide a guideline document, or RTS, can't remember now which that was going to be, to literally be able to say, what is this decision tree that will allow you to say, is it a security? Is it only when you get to the bottom of that and they've all said no, then MiCA will apply. But clearly, because MiFID has been transposed slightly different depending on each member state, clearly the starting point of what qualifies in MiCA will lead potentially to differences. And I mean, there's no way around it because the starting point is what it is. Yeah. So I'm guessing for any lawyers in the room, you're looking at some work and potentially some fees coming in the next couple of years because there'll be a lot of advice, and I can see it happening. So whether it be France, Germany, is it even Ireland? If I was operating and I wanted to operate, I would want to be very, very sure that my product, my digital asset, my crypto, is actually not already falling under any of the current financial service regulation, and MiCA does indeed apply to me.
We are out of time. I'll give both the panelists an opportunity for final thoughts. But the title of this panel was Who's Winning and Losing? And the answer is a little implied. Whatever jurisdiction does not have a clear framework is automatically at a disadvantage, and I include the US in that bucket. But, final thoughts from Mai and Nina on, how you see your respective jurisdictions moving ahead and advantages or disadvantages, what you're looking out for.
I think it comes down to the fact that legal clarity, which Mike is going to bring, is going to be fantastic for you to be able to have certainty of sort of setting up in Europe and being able to access the European markets. I think with the UK, there is a degree of flexibility, though, because it hasn't quite gone that far yet. I mean, despite the fact I'm a lawyer, I'm going to tell you all need to get legal advice, and it is very, very important. I actually think one of the losers is also you guys, the guys you're building it, because you're having to deal with a US regime that's fragmented, a European regime which is probably on the cusp, but very, very correctly pointed out, is going to have some real knots in there about how it actually works. And then you've got the UK, and then we haven't even touched on Asia Pacific, but they're doing some really interesting stuff. So I do have sympathy for you guys. You're trying to innovate in a world which is not quite caught up with you, but at the same time you have a lot of challenges. And I think it picked up on the guys who did the enforcement piece. They're also black and white lines. They're criminal. All of this stuff on what we call the perimeter is criminal. So the losers I feel at the moment are you guys a little bit.
Sorry. And Mai, please, the last word.
I'd say hand in heart, I think the loser is innovation. I'm afraid I will say this. I guess the best way for me to explain this, and I always go back to the analogy of the first car built by Henry Ford, which pretty much looked like a horse cart. Didn't have any windscreen or seat belts or airbags or doors. And if you go back to Henry Ford and you told him that that car would be able to drive at 220 kilometers an hour, would that ever been built? Maybe not. So I'm worried that the fragmentation of regulation or the regulation per se would actually stop innovation. I think we've done a lot when you look at what's happened in the world. Even in the last 5 years, when I go back to the Libra paper, when that Libra paper came out in June 2019, it was like Armageddon. We've moved on so vastly. Policymakers, regulators, us talking about it. What DeFi has done, what stablecoins have done. We're moving on from fraud, scams to all the different bits, NFTs. A lot has happened in 3 or 4 years. I do think, and I think it's great from a company perspective to have certainty. I think the biggest risk still is consumers, because from a policymaker perspective, from a regulator perspective, nobody wants to be on watch when there's a big issue where their consumers lose money, and I appreciate that. If the regulation happens and it adds cost to small companies, or the process is cumbersome for the company and for the citizen, I'm afraid innovation is the one that's lost. And that's why I think that a global-wide adequate regime in the long term would be adequate overall for the sector.
On these slightly gloomy notes, I think we can all go get a well-deserved drink. Away. Thank you both.